What is up, guys? It's CJ here, and welcome to a special video. This is going to act as a trade review and also an SWT case study or Wyckoff case study. In this video, we're going to be talking about advanced Wyckoff concepts and about my system that I am building. We're going to be talking about different entry triggers and how we can be using our Wyckoff knowledge and our Wyckoff points in combination with these new entry triggers. So if that sounds exciting for you, let's dive into the video. So the first entry trigger we're going to be talking about in this video is called a rejection block. And gold seems to really like these. I'm ironing out what timeframes I like to be using them, but you can see them happening all over. You can see one right here. You can see them all over, but we have one right here. So a rejection block is basically a wick into a POI, a bigger wick into a POI. And it's as simple as that. Obviously, you need to build context. So I'm going to make the rejection blocks in this video. I'm going to make them, I think, this color. Maybe this one. Yeah, let's use this color for rejection blocks in this video. So we're in one right now. Sometimes maybe if you're newer to Wyckoff, you're always waiting to take a range high or low, but we don't really have a PSY. We don't really have too much going on here, and we definitely, before anything, need to be taking a look at that rejection block. So if we come down here on the lower time frames, what do we see? Well, we see a nice range forming, so let's build our Wyckoff model starting with the PSY. So you get that PSY that does come into that 5-minute order block. This validates the range for me. Really do like it. We're going to be talking a lot more about those in this video and how to validate ranges. Put this back just ever so slightly. Perfect. So now we find ourselves in this range. We're going to be talking about advanced Wyckoff in this video. Put this to here. And so part of that, we are going to be stressing UTADs in this video. This is going to be a UTAD heavy video talking about how UTAD, if you don't know, stands for upthrust after distribution. If you're coming from maybe crypto and you're having a bare bones viewing of Wyckoff, you may be just wanting 3 points, but in the TradFi universe, I think you're going to have a hard time because you can get multiple upthrusts in phase B. If you study Wyckoff, you know that Wyckoff is based on the law of cause and effect. And in phase B, we build that cause with a return to zone. So this does have a pretty nice return to zone, kind of like that UNF right there on the 5 minutes. So right away, we can see that we are going to be watching for this 5-minute IFVG. It's a fair value gap right now, but we're going to be looking to invert that on a UTAD. And do you notice anything about the UTAD? It does look like a rejection block. So when we build out our model here, here's our upthrusts in phase B. It's almost a local model that does not hit target. It does not have to. And then it takes that high again for an upthrust after distribution. So this is really nice price action. And right away, we see that we get that rejection block. So we said we were going to make rejection blocks this color in this video. Whoa, don't want the EQ on there. So we get that rejection block right there. But I'm going to show you the beauty of the entry triggers within the SWT system is that we are going to be combining them. We're going to be combining breaker structures with IFVGs. We're going to be combining IFVGs with rejection blocks. And ideally, we take a trade when we have 2 of our entry triggers. Another thing in the SWT systems we are going to use a lot is volume. So I'm going to pull a volume profile from this swing high, and we can see that we are around that POC, and we have that value area high backing that rejection block. So given that we're going to be using them in they're going to be working together in tandem. So we're maybe going to be taking a rejection block entry. And so I just do want to say, I really like the 5 minutes. So big, like nice time frames. I like for scalping, the 1 minute is good, but the 5 minute is really good. And then 30 minute and so on. So 5 minute is really nice for me. So we'd have been seeing this candle right now on the 5 minute. We're actually going to stay here because our entry triggers are stacking on the 5 minute. So you get the rejection block confirmed right there. Next candle, trying to flip that fair value gap. And right there, we invert that fair value gap, flipping it into an IFVG. If we come onto the threes, we can see it's actually a bigger area. So maybe be extending that up like that. But always knowing the highest time frame. Very, very important, always knowing the highest time frame. So we have our value area high here. Everything is looking quite nice. Entry confirmations are there. So it's either going to be this IFVG, like a 5 minute, or that rejection block. So we can hang out here on the 5 minutes and short on that rejection block, or you can short on that IFVG. It does not matter. Obviously, the rejection block in this case is going to be the highest RR. So if you want to be a more high RR trader, you can just take this rejection block entry, or it's also super valid. If there was two IFVGs here, I would use the smaller one than the highest time frame one, but you have to be careful in some circumstances where it will use a lower time frame one that's bigger. So just be aware of that. In this case, the highest RR would be a 5. So right there, you're tagged into the IFVG trade. If you did take that IFVG trade, you would be rocking at 2.57, which is a very nice RR. So either or, you just get to select. You get to choose what type of trader you want to be. You can be a rejection block guy. You can be a breaker structure guy. We're not quite getting the breaker structure. That would be a trifecta. And we will see those trifecta setups where you do get that breaker structure and retest an IFVG or retest a rejection block. But in this case, we're going to set a limit on that rejection block. Right there, you get filled on that rejection block. Couple chances at it. And there you get that TP for a 5R. So our model completed with no test and an LPSY. I only consider, you could say this is a test, but given the fact that we came up the way we did, how does it look on the 2 minute? You know, it's a very nice model, but you get a little deviation model there. For me, that's an LPSY. If we would have came up and put a test here and then LPSY, that's good too. And then you had an LPSY 2 right here. So your model completed with no test and 2 LPSYs, 5R on that rejection block 5-minute entry. And that is during London. Okay, now what? We're closing candles below that range low. Our LPSY 1 has created the extreme supply. So we'll move this rejection block to there. Has created the extreme supply. Maybe keep this. This got used. We'll get rid of this, or we just won't be extending it. We'll keep it in there. The IFVG was also a very valid entry for a 2.57 RR. So we have that 5-minute order block created right there. And you're out with a 5R. Now we're coming into New York. What's the timing here? Well, we're on the 10 minutes, so we're moving fast. Let's look at the timing. So we are coming into that LPSY extreme supply. We did close on the 5-minute time frame, some candles bearishly here. What's the highest time frame our market structure is valid on? Well, that's a 10-minute break of structure. That's really nice. Can maybe get rid of this range even. And we can put on that this is a BOS on the 10-minute, just to keep in mind. You get that candle close and then you move back up. It's just a little plus one. I think I'm still going to keep the range on it. It does look clean. So we get that break of structure right there. Now we're coming up on New York. So what is the highest time frame for value gap that we can potentially be looking at? Obviously we can go higher, but we are in market maker supply of that LPSY. All right. So nothing yet on the 5s, but on the 3-minute, we maybe have something forming. Oh, nothing too crazy. I like this 2 minute. I like this 2 minute time frame. We're forming a rejection block. There's already a quick entry on there forming a Bojan high, so probably won't get a crack at that. We could though. We could, right? So rejection block there. Kind of a supply chain being created. There was nothing higher time frame fair value gap wise, so can be watching this. Oh, it's not an IFVG. It's just a fair value gap. So we're just watching price right here. And we're looking to trade a potential backup LPSY, a BU LPSY. We're not able to inverse that, but guess what? Guess what? Those rejection block traders just got filled right here. If you wanted to take that rejection block, there's really no reason to go higher. And then running this down. Is there any extended liquidity points? Let's check it out. Well, we got this liquidity point right here. In SWT, we're big on session liquidity in futures. This is actually an Asia low. So Asia before London. So this is an Asia low right here. So this is another extended target. That rejection block entry is a 7.62 to that low. That rejection block was also valid on the 5 minute, and you would have gotten tagged in, looks like right there on that 5 minute rejection block. So not only is it a 2 minute rejection block, it's the exact same rejection block on the 5 minute. But let's say you wanted a little bit more confirmation. Say you didn't want that, just definitely have to show it because that is part of the game now. But let's stay on the 2 minute here. Maybe you want a little bit more confirmation. And right there, you're inversing that 2 minute. Getting tagged in right there. Stop loss. Ooh, I would say probably above this candle. I don't even mind this one, but I've been doing candle bodies. I'm also checking multiple time frames, kind of like what makes sense. So probably right here. Yeah, that's perfect. That's perfect. Just right around there. Doesn't have to be too exact. That's good for me. TP1 right here. And then TP2 for that Asia liquidity. So a couple entries there. I'll show the finished product if you would have been a rejection block trader there. Let's see. Whoa. Nearly getting stopped out. So seems to be like on gold. So obviously this is the obvious one. I'm just trying to refine it as much as possible on that candle body, but you're still absolutely fine unless we come back up. But that was a bit of a hotter retest for sure. But looks like we end up breaking down, hitting TP1 right there, taking off some contracts. And then hitting TP2 right there, which is that London draw on liquidity that Asia draw on liquidity, that Asia dole. So what just happened here? Are we trading Wyckoff? Absolutely we are. So obviously we can take out that LPSY too. That was just to get us to finish that technical target. And we came into extreme supply and we got a BU LPSY. Very common. So BU stands for backup. So after your model, it's a reload of sorts. And then we are using our entry triggers to trade those reloads. Had a pretty aggressive retest right there. But guess what? It also gave a rejection block entry. It wasn't the cleanest, right? But it came into this supply. So also, yeah, just got to be careful with the stop loss. I tried to put a pretty aggressive one on there for you guys. Nearly cost me, but it came into that supply right there and then created yet again another rejection block where this candle closed bearishly, and then you could have limited it and again been in. I showed the IFVG entry. If you would have been waiting for the retest of the IFVG, you also would have been tagged in. So you could have again gotten in. Don't be scared about that retest. Some IFVG traders also wanted to get in, But it is crazy that if we go on the 5-minute, no, let's go on the 2-minute because it was the exact same rejection block. That rejection block, aggressive entry. Maybe you as a trader like to start your position small with the rejection block, and then add in for the IFVG. This is only possible if you know all of these different entry triggers at your disposal in combination with the different Wyckoff points. In this case, we're trading a BULPSY. Does everyone on New York know that? I'm not sure. Potentially some of them do though. So that's a really nice trade here. This is a super high RR. And then I think I think the way I will be playing these, so to reveal my strategies, is if I do take this rejection block entry, which is high RR, and then we get this inverse fair value gap close right here, I will throw another limit. So I'll be adding to a winner and then moving my stop loss. So I'll be adding more on this and moving my stop loss. So now I have more in the play because, at the rejection block time, you don't know as much. You know a lot more when you're getting that inverse fair value gap. And guess what? You're also getting, you're having a trifecta of entry triggers right here because you're also getting this break of structure back to bearish, making this a PL, a PH, a protected high. So when this candle comes back up here, you don't have to be scared. Obviously, you want your stop loss in a good place. And again, that candle body remains untouched. I'm a big candle body guy right now. But either way, you don't have to be scared here. And there's people filling more shorts to complete that order flow objective. Really liked a couple trades in here. And this is kind of what it looks like when you get Wyckoff all working together. Really nice to look at the 3-minute time frame. So you're trading all sorts of points in Wyckoff with different entry triggers. So very beautiful. 5R here. And even if you took this, it was like another 3.63 RR. Super nice. The rejection block entry obviously being even better. But let's continue to play price here. So those two trades have gone down. Think we can play it a little bit faster, guys. Think we can play it. Let's do the 5-minute just to be safe because I do not want to go too fast. Okay. So we've started to range now. Again, we have this 5-minute order block created by this BULPSY. So here in SWT, we're having a SW1D, and the symbol for that is this kind of lasso symbol. Let me know if you guys like it. Don't mind it. It's a little bit big. Okay, so we're having our main model, which is SW1D, a Wyckoff model 1 distribution, getting that BULPSY, and then you're trading a MSC model, market structure continuation model, if you will. And then now we are looking for potential redistributions. So let's come into this range now, and we can pull a new range. Also, how did our volume profile do? Is it extending right? Nothing too crazy. Let's extend it. So look at that. So where we did retest right into that value area high, yes, it does deviate, but still keeping that structure intact. And we're right around this POC now of this swing profile. But I like to look at this range here, having a nice return to zone buildup. So phase B is underway. Did you come into any supply? Yeah, you came into this range supply right here. Validating this as PSY. Can we get the switch this time? Yes, we can. Validating that as a PSY. We have then, if that's a PSY, this can be a buying climax. And we're getting up thrusts in phase B. Remember what I said about up thrusts in phase B? So what did we just do right there? Well, we completed a little local model. So let's put that on. We completed a local model. Now if we were to take that, we will have a UTED, an upthrust after distribution, because we just had a little distribution and we have a supply above. It's that 5-minute order block. What do you know? We take that out. We take out that UTED. Sorry, we take out that little mini distribution. So right away, we know we're in a state to be looking for plays. This can be our UTB, symbolizing all the upthrusts that we've had in phase B. Perfect. Return to zone, looking really nice. Didn't have an accumulation at this low, just a one singular point for the AR. Sometimes you will have a full accumulation here that even can be traded sometimes. Sometimes you will just have a point. It doesn't matter. Automatic rally, back up. Let's find our highest time frame fair value gap, because we know that we're looking for a Wyckoff point. And what do you know? Get that right there on the 5-minute. Inversing that fair value gap, confirming this as a UTAD, an upthrust after distribution, which we are seeing here. Perfect. Short can be going on there. Stop loss above that high. Run down to that AR target. And I mean, we got a lot of targets below. We have this target as well. Perfect. So we have this liquidity target here, which is New York. And then we have huge imbalance right here. Nothing, no demand really. So we got this liquidity point and this liquidity point. And this liquidity point. So we have a lot of liquidity below the range. This would definitely be just a time to pay attention. And that's why I guess we were. It's funny to see how it will play, but so we were definitely paying attention because lots of liquidity below the range. We have, we have this going on right here, and we're getting a redistribution in this BU LPSY supply. So on the 5-minute, let me just show you the range again on the 3-minute, just kind of get the aesthetics, and then we're going to look at the 5. This video will get a little bit more technical on the Wyckoff side from this point, maybe a little bit later, but let's see what we get. What we get right here, this candle is very important to me. This candle makes the setup even higher probability. Didn't talk about the rejection block, by the way, which you maybe would have got filled. It's not that clean for me. I don't really like it too much. But it did come into a POI and it did sweep liquidity. So it could have been valid. I didn't like it as much. That's why we have the other entry triggers, because we're just rotating them around for what works at that specific time. You get to be dynamic. But here we get that break structure. Let's also talk about timing. So Asia is about to open right here. Asia, let's get that on. Asia is opening right here. We'll make that orange or purple. So Asia's opening right here. Timing could not be better. Ideally, we would want Asia to push up. I think I do have my pre-plan. Let me see here. Oh, look at this, guys. Look at this. Oh, no. Okay, I'm not sure. Did that all stay the same? Perfect. Oh, there we go. There we go. Now that drawing makes more sense. Ah, I see. The drawing saved me here, guys. So why is this not valid? This is a really good teaching lesson here. It almost stumped me. We just traded this last night. Why is this inverse fair value gap not valid? The same candle did the same work, but it's because you have to use the lowest one. That is a really good thing that we caught that there. So you have to use the lowest one. I want to stress that very hard. This candle still confirmed both of them, but if this candle would have stopped here in this fair value gap, not flipping this second, just watch, don't watch my cursor, just watch the horizontal line. This fair value gap right here, we have now inverted it to become an IFEG. Really good catch there. This was the point we were watching at the time. So this one, not relevant. It's this second one, and you did invert both of them. So that would not be the trade. This would be the trade, candle bodying it potentially. So Asia's about to open. This was my pre-plan that I sent in my private community. We were on live as well, talking about it. Just realized I didn't build the model. There we go. So here is our model. We are ready now to take the trade. The plan was also pull a volume profile. You can see this POC is right there as well. Pull a volume profile, intra model, and that POC is in there as well. So yes, I did draw the drawing right to that POC. Knew what I was doing when I did that. I just drew it to that POC, wasn't random. And then you also have this swing POC right on this level. So it's a really strong level. You got those POCs right there, and Asia is about to open. So the pre-plan is that Asia pushes up, fills their shorts, and then reverses back down to this AR technical target and hopefully beyond. That's the pre-plan. Should we get this swing POC out of the way? So just know that it's there. I don't want the chart to be too messy, but just know that it's there. Okay. We will have to take a slight pause because TradingView is not letting me play. We'll be right back. All right, and we are back. So, little interlude. We've gotten that breaker structure. We have Asia opening. We have our limit set on this 5 minute, the second one, the valid IFEG. We'll take this right off the chart. I was also, let's put it back. I was also playing around with, if you have two, putting the stop loss above that second one if there's no relative thing. So keep that in mind. Stop loss above that second one, but right now I am a candle body guy. So here we have Asia opening. First candle and second candle. Now guys, check this out. My drawing and this candle are one and the same to the tick. This is drawn beforehand. I'm going to that right onto that POC. Let's get rid of the drawing. Right onto that POC, filling you into your limit. And now you're in that trade. Filling your limit to the dot on the drawing. And Asia is now open. We'll get rid of this and reverse it straight back down. Interesting here. Very, very interesting. Trade looks great. Trade looks great. Okay. Well, I think we're going to get filled. No dice. No dice. Price wants to go back up. Oh, well, there's this 5 minute. There's this 5 minute supply. We'll be fine. We'll get an LPSY, reject us back down. All good. All good. Fine, we'll hit this, go down. How do I want to play this? I guess I'll just show. Put it back. Put it back. Okay. All right, guys. Now we're going to get into some technical stuff. We're going to get into some advanced stuff because this model forced me to level up and I received a lot of downloads about this model. So let's get into it. This is going to be the interesting part of the video. I mean, it's all interesting. This is going to get a little bit more advanced now. We're 29 minutes in. And if you are here, you are a killer. And I'm going to deliver some sauce here for you. All right. How do I want to play this as a trader? I want to be relentlessly taking profits. I want to be paying myself. I see price down here, front runs and gets this bullish candle. I'm moving my TP. I do not care about this little bit of RR. I'm moving to this UNF and getting out with my one contract. I have runners, but I'm getting something out. We got the bearish delivery. Okay, I do not care if it goes down. It'll probably wick down and I'll still get filled here if it does, right? It'll probably be a hard candle down and I'll still get filled at this AR low. Let's not be greedy. Let's move that TP up as soon as we see this bullish candle. That next candle would take us out. TP1 hit, secured, everything's good. Stop loss goes to break even. Stop loss was at break even at this candle. I think when it swept here, we all went stop loss to break even. So SL, risk-free trade, beautiful, but we're out with some profits. We've secured, our accounts are paid. I don't do that. I feel like a rookie, but that's how we learn. Now, this is where it gets really, really interesting. So this is where the video is going to take a turn. Stop too far. We're going to get into some advanced Wyckoff now. I'm going to delete this range. I'm going to delete some things. We're going to talk about fractal ranges. So remember what I talked about up thrusts in after distribution, the UTAD. We're going to, it plays out fractally here. This trade is over, got stopped to break even, didn't realize anything. The lessons are invaluable. I'm going to delete this, okay? And we're going to get into fractal Wyckoff because you may notice this point. You may notice this point. You may also notice this order block was here, like this. You may also notice, I think it was a 3-minute. Yeah, even better. Let's refine it. 3-minute order block within a 10-minute, bang. So that validated, so I'm gonna get this off. This is fine here. So that validated this as a PSY. Potential PSY, right? That would make this a BC. We would still have the same upthrust in distribution rate, or sorry, upthrust in phase B right here. And we would still have that same UTAD. That means that this range is also a Wyckoff right here. It's also a Wyckoff. So that would mean that this range right here completed and that this was a nice play right here. This was a nice little Wyckoff right here. PSY, BC, UT, UTAD. Remember what I said about that second for value gap? I'm going to play around with that theory. Doesn't matter either way. But if we did go above that, now we got a higher RR, and this is TP1 for 2.56. Or just as price goes down here, you know, be ready to take profits because you knowing about this range right here. This BC could have just swept liquidity right here. Yes, we do have a PSY. This is also important. But just understand this little range right here. We're going to take a screenshot of it. And we're going to save that. So this range played out. Now, that would mean this could also be our up thrusts in phase B. Let's move this. Let's move our points around. Get rid of this. Now let's take a look back at the bigger range because yes, it does have those points as well. Has a PSY. Get rid of this. That was a mini model. These can all now, this model itself can be the up thrust in phase B. All of it. This is advanced. So we'll get rid of these. They did not do any job. This trade is over. But is the actual trade over? Let's look at the 10-minute. Well, this still looks like a pretty nice range. You have all this liquidity below. You had all this price action. We didn't even take out the supply. You're getting a very, very nice rejection block. You now have this range. For me personally, I was done after getting stopped to break even there. Didn't like it at all. But now what do we have? Rejection block. Right there on the 10. How does it look on our nice 5-minute time frame? Oh, it's exactly the same. Okay, we're still in business. This swept liquidity and we're in supply and we're in a Wyckoff model, this bigger model, this whole model becoming our UTB. So sometimes you have to stick with it, but this is an advanced play. I'm not going to lie. Not going to lie at all. Yes, you have a fair value gap right here, but that's going to be a pretty low entry. Put that fair value gap on. Going to need that to switch. It's not switching. It's fine. Next entry could be this rejection block. This is a bigger model now. I would view this as TP1. If we're going to take out these points, we're most likely going to take out this one, and that's going to be a cascade all the way down. And this is where you could maybe really be thinking, you know, obviously this is TP1 right here. Maybe this is even TP1, doesn't matter. That's still a good RR, 2.8, 4.23, 10.8. So here's now what we're looking at like. Let's watch price on the 5s. The rejection blocks adds a new level. Wicked in right there, algo. You're now in this trade. TP1 has been smashed. What was that? It was 4.23, so probably take 50% there. 2R around there. TP1 has been hit. This is very high powered. Price doesn't just do things randomly. You also inverted that fair value gap, but see, it was too late. Let's see about breaker structures. Did you get any breaker structures before? Yes, you did. So here we can combine. Here we're combining now, instead of IFEGs, we're now, so we have that rejection block on our chart. We have the level. That's the level we're limiting. Now we're combining breaker structures with rejection blocks. So if you have 2 of your entry triggers, that's even better. So you're getting that breaker structure right here. This is the price. This is how you see price. So maybe you were upset about getting stopped out. Preferably, you realize some profits. Like I said, realizing some profits right here. So we're still feeling good about the play. We're already up in profits. Yes, we got stopped out, but we've made profits. We've made profits on it. Now we're looking to get this rejection block play. Are we creating any supply? Yes, we are. If we see one more candle. Next candle, perfect. So now we have overlapping supply with our rejection block. Rejection block is the entry trigger, right? So you could even go on that supply. Doesn't matter. We have that rejection block on there. We make that a little bit darker. So there's our rejection block. Saw the breaker structure. We have 2 entry triggers now. And that next candle wicks you into that trade. Back to the 3-minute. So now we are sitting in this trade. Back to the 5-minute. Just looks like that. So you had 2 of your entry triggers right there, confirming now a UTAD of the bigger range. Like we said, all of this becoming your upthrust in phase B, which was a local model, getting a UTAD. And then price ends up playing out. And it's an absolute monster trade. Absolute monster. Don't want all these labels to look too messy, but you know, we did a lot of work here in this video. That's a monster trade right there, guys. And it's an advanced trade. It's an advanced trade. You have to be able to recognize the manipulation and be able to act quickly and to not get discouraged. We got discouraged right here because we didn't know to take profits, either moving the TP there or about this local range at the time. I don't care about that because the downloads from this are extraordinary. So you ended up getting an SW1 RD redistribution. Just like that. So you had SW1 into a redistribution like that. And it's an absolute monster. Bunch of different entry triggers all working together within an advanced Wyckoff knowledge base. That's how we are going to be able to secure these monster trades and to be able to trade the market on a different level than most could ever dream of. Truthfully, I think. I'm not 100% sure on that, but that's kind of what I am thinking. So even we were getting that little fractal model. We put it back on. We can. So we get that fractal model. That's right here, that upthrust after distribution. And that will basically conclude the video, guys. Let me know what you guys think. I wanted to give as much sauce as possible in this video, and I thought that this was just an absolute masterclass on gold. I learned that gold loves all of the entry triggers, likes to be used in combination. We had that rejection block trade here. There was a rejection block trade here and an IFEG trade. You also had the breaker structure for another retest of that IFEG. Just so they're all working in tandem. You get the IFEG confirmation right there. Super nice Asia timing. Come down, doesn't quite hit it, but completes this local model. That all became the upthrust in phase B, and that UTAD upthrust after distribution takes it out. Rejection block entry paired with a breaker structure, and that could have netted you a monster RR. So, little Easter egg for you guys at the end of the video. If you guys have been here to the end, I appreciate you for being here. And I want to finish off with this SMT bearish divergence here that we did have on the chart while trading. I forgot to mention it within the main video. And that comes on this BC2, this UTED. We were watching it for this local model too, because it was also present. This whole area will be it is present. So I'll show you silver. The silver story starts with this BU LPSY, where on silver at that time during New York, instead of a retest entry, market structure continuation entry, we have this Wyckoff range on silver, and this is our other type of distribution model, our SW2 distribution model that we see playing out here on silver, or not playing out, but is ready to be taken, because you have this 5-minute inversion right here with the range deviation. Gold is in the spot that it is in, it's in supply, and same with silver, these rejection blocks right here. So if we play out price, I'll play it for you on this 5-minute, where you could have just limited this. This is New York right here. So next candle right here on 7:30, this is the first candle of New York. Would have tagged you into the trade. You would have been tagged in, and you would have been along for the ride. Breaks down, takes that high again, and then makes its way back down. So if you didn't want to trade that backup LPSY on gold, you could have traded this SW2D Solari Wyckoff Model 2 distribution on silver. And if we continue to play out price here, you'll see that it starts downtrending very aggressively from this distribution. And it really is going down, and that is the same as gold. So if we're looking at silver here, that was that backup LPSY, and this downtrending price action is actually that Wyckoff redistribution range on gold. So super interesting price action. I think it's extremely clean how it did that. So this is that backup LPSY New York trade. Silver has a Wyckoff model instead. Yes, this is a Wyckoff context trade, but this is actual Wyckoff model trade. And then coming into this range, this redistribution range, you have this SMT right here. So you're having extra confidence again to try this trade again, and obviously to take the trade in the first place. So just wanted to point out that little Easter egg, here at the end of the video, because it does add a little bit more context and a little cherry on top to the video. Glad that we were able to include silver in the video, because these are correlated pairs. They do work together, and so they will get SMT divergences, and that can help us to trade each one better. So, all right, guys, that will wrap up our case study, our SWT case study on gold here. Very beautiful price action. I consider it a masterclass. And this is really, you got to see so much of the emerging system. I thought it was such a good way to debut lots of these stuff and to show the entry triggers working in tandem, and the distribution ranges, the redistributions, and the retest, the market structure continuation models. So it was just a perfect case study. So, all right, guys, thank you for being here. I've been CJ, and I'll see you in the next one.